Hello everyone, welcome to Indian Economy by Aman Soni. In today's news hour, we'll discuss the important articles related to economy from the Hindu newspaper. Can directly skip to the editorial page because we don't have any economy related news in the news page. Here we have an article related to agriculture. Step up agri spending to boost farm incomes. So let's look at this article. These articles begin by saying that the allocation for the agriculture sector in this recent budget has marginally increased by 4.4%. But this increase of 4.4% is actually lower than the current inflation rate of 5.5 to 6%. And the author states the data of the FAO report. It says that India is one among the top 10 countries in terms of government spending in agriculture. Currently, India spends around 7.3% of its share in agriculture, but it is less than countries like China and other middle income countries like Nepal, Bhutan, etc. But in spite of spending so much, there are problems in the Indian agriculture. And what are those? For that, the author again quotes a report called the Agriculture Orientation Index. So this index is based on the goal 2 of the SDG goals 2013, that is the zero hunger. The SDG goal 2 says that increase in investment in rural infrastructure, agriculture research and extension services, and increase investments in technology in order to increase the agricultural productivity. So based on this SDG goal 2, this particular index measures the impact of government spending on the contribution of agriculture to the GDP. So the index calculates how much the government has spent on agriculture and how much the agriculture sector is contributing to the GDP. And if we look at that, it shows that even though the expenditure is one among the top 10 countries, the share of agriculture sector in GDP is comparatively low. It is not as much as it should have been. And what is the main reason for that? The author says that main reason for agriculture sector not giving that much returns is low productivity. So the author gives the examples of other countries in Southeast Asia whose productivity is very high, and even other lower income countries like Zambia whose incomes and the yield are very high. So India in this index takes 38th rank despite being agrarian economy, and we are the country who produces some of the crops as the world's highest. So if we take the cereals for example, the productivity of our country compared to the East Asian countries and China is very low. The yield per acre of our country is very low compared to the other nations. And we think one of the main reasons for this is the small land holdings. But the author says that the average size of a land holding in China is 0.6 hectares, which is lower than India's average. But still, China is having a higher yield. So even though the size of land holding has an impact, it is not one of the main reasons. So we come to know here that one of the main reasons is our primitive use of agriculture techniques that we use to produce the agriculture, and other aspects like the farmers not getting the right price, lack of market access, lack of cold storage, all these structural problems because of which the productivity is low in the agriculture. And the author talks about how the budget has reduced allocations for certain agriculture based schemes which would have an impact on the rural farmers. Finally, the author says that we have to increase the investment in the agriculture and we have to take other measures so that the productivity would be finally increased. And what are those other measures? Those are developing the irrigation facilities in the agriculture sector, urban infrastructure, developing the national highways so that there would be connectivity between the rural and urban areas that will lead to access to markets, investing in the rural infrastructure, rural transportation facilities, cold storages, setting up markets in the rural areas as suggested by the National Commission on Farmers. And all these measures have to be taken to enhance the access to the markets and thus integrating the small and marginal farmers to the agricultural supply chain, because in India the small and marginal farmers make up the majority of the farmers. So if we can integrate them into the supply chain, the agriculture productivity and incomes would obviously increase in the future. That's about this article. Let's move further. We don't need to read this article. In the world page, there is a news about EU joins chip race. So this article basically talks about, because now the manufacturing of semiconductor industry is highly focused in countries like Taiwan, China and South Korea. Now the European Union wants to diversify its source of chip manufacturing. So the EU is going for increasing manufacturing in EU itself. For that they have given certain incentives for the manufacturing firms. Now because of the chip shortage, now irrespective of the chip demand in the industry, the manufacturing of semiconductors have become a strategic decision for the countries. And in the business page, we don't need to read article related to Airtel's profit. This article is important. India's debt to GDP better than US. So we have some concepts here and those are important for the exam. In previous news hour we discussed that India's debt to GDP. So what is debt to GDP ratio? It basically measures how much of our GDP is made up of debt. So if you say debt to GDP of 10%, for every 100 rupee of GDP, we have 10 rupee of debt. So having a higher debt to GDP is bad, because in future more payments would go towards paying off the interest that we have borrowed. And the government secretary here says that our debt to GDP is lower compared to the United States, Japan and other developed countries, but the rating agencies have double standards towards India. That's why they are giving a low rating to India. And here there is one more concept called fiscal glide path. Fiscal glide path is nothing but the steps that the government takes to achieve the fiscal deficit targets. So here if we can see this, the glide path that has already been provided in the last year's budget, that will reach a deficit of 4.5% of GDP in financial year 26. That means what all the steps that the government takes in order to achieve this target of fiscal deficit by 2026, those steps are called the fiscal glide path, the path that the government takes to achieve the fiscal deficit targets. And the secretary also talks about bond yields increasing because of the expanded borrowing. So how are bond yields and increased borrowing of government dependent? If the government increases borrowing, that means it has to raise more funds from the market. For that it will issue more bonds, it will issue more debt securities, it will issue more treasury bills and government securities. So when it starts increasing more bonds into the market, the supply of the bonds would increase. If the supply of the bonds increases, the demand for other bonds prices falls. So because of the demand for other bond prices falls because of the increased supply, the yield on the other bonds which are already existing comes down, because those bonds will have to give more interest rate in order to compensate for the increased supply, the yields on those bonds will come down. And the secretary says that apart from the government borrowing, even the oil prices, inflation in global economy, and the US government's federal tapering program, all these are affecting the bond yields and they are having an impact on the bond yields. We don't need to read this news. We can skip all this. We can just read through the headings and we can skip that. And those are the articles for News Hour today. Thank you so much.